annuity helps cover your essential monthly expenses. Live the life you want. Find out how an annuity can give you lifetime income at protectedincome.org.
On the next Squawk Box, navigating market turmoil, Mohamed El-Arian with a global economic forecast for investors, plus his take on the Fed's next move. Squawk Box, 6 a.m. Eastern today. Watch and listen live on the CNBC app.
The disarray is palpable. But as the Oracle of Omaha always says, be greedy when others are fearful. Just please, if you're going to buy, buy gradually on the way down. Watch or listen live on the CNBC app.
Do you worry about going to the dentist? After all, a visit to the dentist can easily cost $2,000 or more. Well, relax. The Carefree Dental Card is now available in your area. Call now and we'll send your actual card at no cost today. With the Carefree Dental Card, you go to the dentist whenever you need and you instantly pay a lot less. Activate your card and you can start using it immediately. From exams and cleanings to more expensive procedures like crowns, dentures, even braces, they're all included with the Carefree Dental Card. Say you go to the dentist today without any card and your bill is, well, ouch. Wait a minute, let's try that again. You go to the dentist today and show your Carefree Dental Card, you save $525. The Carefree Dental Card is just $15.95 a month. So call now and make going to the dentist carefree.
Call 1-800-478-0809 to receive your free Carefree Dental Card information kit. Call 1-800-478-0809 now.
To the global coronavirus outbreak now. Chinese President Xi Jinping arriving in Wuhan, China overnight to inspect efforts to control the virus spread. This is Xi's first visit to the epicenter of the global outbreak since it began back in December. Meantime, Italy's prime minister announcing drastic steps to contain the world's largest outbreak outside China. Claudio Lavagna is joining us now from Rome. Claudio, what's it like there?
Good morning, Courtney, where it's almost deserted. I don't know whether you can see around me. I'm at the Colosseum right now, and it is one of the most crowded, usually the most crowded places, not only in Rome, but in the whole of Italy. And there is really a few people around, and mostly they are foreign tourists because of what the government has told Italians last night. As you said, the Prime Minister last night in a very dramatic press conference told all Italians, 60 million of them, to stay home unless they have a real reason to move around, like a work reason or a medical emergency. They should just stay home to prevent the spread of coronavirus. And even if they do go out, and a few are, of course, including me, for work reasons, you need to carry a self-certification that states who you are, where you're coming from, where you're going, and why. Whoever breaks the rules, well, they can incur into a fine of about $250 or even 3 months in prison, Courtney.
I was just going to ask, how is all of this being enforced? And as you mentioned, there's not a lot of people out that you can tell, so it sounds like the citizens are taking this very seriously.
They definitely are taking it seriously. I mean, usually it takes a while to move around Rome. Rome is a very chaotic city. There's a lot of traffic. There's a lot of people around, including, of course, a lot of tourists, even those ones have now disappeared in droves. It's so easy to move around these days. There's barely anybody around. It took me 5 minutes to get here. Usually it takes 20. Nobody stopped me because within the city, of course, there are no checkpoints. But I'm being told that if you do get out, for instance, from the city on a train station, in train stations there are checks. There are some policemen or the army who are asking you for the self-certification. If you don't have that piece of paper, that form, they give it to you to fill it up. There are some checkpoints, especially in the north, at the entrance of on the highway, and the entrance in several hotspots, like for instance Bergamo, which has the highest number of coronavirus cases per capita here in the whole of Italy. So it's fairly easy to move around in a city like Rome. Not so much if you want to get out of the city or throughout the nation, but certainly it does look like it's almost a ghost town these days, Rome at least, Courtney.
I know that we have to let you go, but very quickly, you mentioned the tourists as well. What happens if you are a tourist, you're not an Italian citizen, and you're in the country when this quarantine, this lockdown went into effect?
Well, it's absolutely fine for tourists in the sense that they can still move around because they have a reason. They are tourists and they're just here visiting. The problem for tourists is that everything is closed. I mean, galleries, the Colosseum, archaeological sites. You can't essentially go anywhere. You can go to a restaurant, but restaurants these days close at 6 o'clock in the evening. And Italians, I mean, just think of that. Italians tend to eat at 9 in the evening. So that's a problem for tourists. And we spoke to a couple of American tourists just now who were enjoying the fact that Rome is so empty, but certainly they were not enjoying the fact that they can't go in anywhere. So luckily, this is a beautiful sunny day, so they can take a long walk. But it's certainly not the Italy they were expecting when they came here, Courtney.
That's true. I guess it's not the typical Italian cultural experience. Claudio Lavanga, thank you for joining us, and stay healthy. Well, billionaire investor Steve Cohen's firm has found itself at the center of the coronavirus outbreak. An employee at Cohen's Point 72 Asset Management in New York City has tested positive for the virus. Earlier reports suggested the employee has been self-quarantined since early last week and has not come into the office since. A Point 72 spokesperson tells CNBC the company is taking precautions and preventative measures to protect its employees. They add the company has extensive continuity plans in place to make sure it can continue to operate. Well, still on deck, recession warning signs, what the price action in financials is telling our next guest about the future of the U.S. economy. Plus, a quick look at the top S&P 500 winners in the pre-market. Worldwide Exchange is back after this.
Just as important as technology, from the customer experience to the operation.
The station you're listening to is experiencing technical difficulties. We have
operations that support it. It's more important than ever to activate collaboration across the C-suite.
The alliance between EY and Adobe is really focused on a common philosophy about putting the customer journey first.
Everybody needs to be thinking about the customer. That's when we transform the entire dialogue of the C-suite.
I found a place in my heart. I found a light in the dark. I found my heaven.
The Range Rover Evoque. The only adventure sales event is happening now.
The S&P 500, the benchmark for most U.S. equity investors. Only Sector SPDR ETFs can divide the S&P 500 into 11 investable pieces. This allows you to underweight and also overweight sectors to best meet your clients' objectives. Sector SPDRs, write your next chapter in investing. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for a prospectus containing this information. Read it carefully.
In nature, and also find answers. Our search to transform farm waste into renewable natural gas led Chevron to partner with California Bioenergy, working to provide an alternative source of power for a cleaner way forward.
HSS is the most reliable place to improve your body's movement because we've been entirely focused on that for 156 years.
Our quality care is becoming more widely available, helping large populations to more reliably and efficiently prevent, diagnose, and treat musculoskeletal conditions.
Our purpose is to help people move better and perform better than any place in the world.
Welcome back. The big banks trying to bounce back this morning after the sector suffered its worst day since April 2009. Financials remain in bear market territory, down more than 26% since their most recent 52-week high. That was hit back in January. Joining me now is RJ Grant. He's managing director at KBW, a Stifel company. RJ, good morning. Thanks for being here with us. What a day yesterday for the entire market, but of course the financial sector as well. When you look at these big where rates are sitting right now, particularly the 10-year.
The station you're listening to is experiencing technical difficulties.
Albeit off the lows, but still under 0.7%. I mean, can banks really recover from this?
Yeah, I mean, yesterday was clearly one for the record books. Last week we were struggling kind of with the rate cut and obviously fears around coronavirus. So we did see a good amount of selling post-rate cut. I think banks are down about 20% in the last 3 or 4 sessions. So that isn't necessarily something new. But yesterday, for the most part, we saw a bunch of selling from short sellers, from long sellers, and a bid really didn't materially develop throughout the day. And that kind of speaks to what you were talking about earlier. You have coronavirus concerns, you have low rates, and then the big new news was the oil price wars over the weekend, which was kind of felt like the final blow for the financials yesterday, especially the banks. The rates, plunged down 35, 40 basis points, and investors are starting to make the bet that a recession could potentially be near.
And so what would happen to the sector if we look at a recession and if we look at Fed intervention almost tapping out? I mean, how many more tools do they have in their toolbox? Although we are expecting this last one, surprise as it was, didn't do much.
Yeah, no, it didn't do much. And, lower rates, banks are not necessarily built to handle zero interest rates, as you can see in Europe and Japan. So our research department about 2 weeks ago did a piece that talked about a less adverse case for the banks, which would be 1 rate cut and slower growth, where we avoid a recession, and then a more severe approach, which would be 5 rate cuts, 50 basis point 10-year, and close to a zero interest rate policy. So I don't think many people thought we'd go to that place in 2 weeks, but this is kind of where we're at right now. So we stress tested the banks, and we feel that in a more adverse scenario, the median impact EPS could be about 25%. So I feel that a lot of the banks have kind of adjusted to that already. I'm not saying that there's not issues out there and we can't go lower, but I feel like, some of the requests we've gotten in the last couple of days for work around the banks, people want severe stress test, analysis. They want work on European and Japanese banks, which trade at 50% of book value in some cases. So we're starting to see investors really, I don't want to say push the panic button, but really prepare and hunker down for adverse scenarios in the sector.
So if you're talking about adverse scenarios, you're talking about these 2 different scenarios, the second of which more severe. You didn't think we'd get there, but it looks like we are.
Yep.
You're building in recession.
Yes. I mean, I think if you're going to go to that place in scenario 2, investors are clearly building in the recession probability. And we put a couple different analyses out there for investors to express how they feel and look at the work. And, the market is voting right now with what they feel.
And so what do you do if this is the scenario?
Yeah,
What's your recommendation?
So it's a little bit, a lot of folks are trying to compare it to the financial crisis. It's a little bit different in the sense that the banks' balance sheets are a lot more well capitalized, are a little bit more diversified, not as much exposure to the mortgage market. Even from 2016, banks have tightened up their lending standards on oil and gas and hospitality and travel. So the lending standards we feel are higher and better. So there's good capital return stories out there. There's conservative banks that have historically made good loans. So, I mean, we feel that if investors have a great opportunity right now to move to quality, because there's a lot of trophies on sale in the